Before the GST Council's decision, the online gaming industry had to shell out an 18% tax on gross gaming revenue or GGR. GGR is the difference between the money wagered by the players and the amount paid out as winnings. Let us consider a scenario where 5 players each had put in 1000 rupees for a game. The total wagered amount is 5000 rupees. Out of this, suppose 2000 rupees were given out in the form of winnings to the players. Then the company had to pay 18% GST on 3000 rupees, which amounts to 540 rupees. From the player's perspective, they have to pay an 18% tax on the platform fee. The company charges this fee when the players place a bet. In the above case, suppose a platform charges 10% of the wagered amount as the fee, so the player was liable to pay 180 rupees as a tax on the platform fee. However, the new norms have shifted the tax burden to the customers. Now, a 28% tax will have to be paid on the amount deposited by the player in a game. Suppose a player puts in 1000 rupees in a game, he or she will have to pay a GST of 28% amounting to 280 rupees. Additionally, they will be charged a platform fee by the company. This varies across the platforms. Here we will assume that the platform fee is 10% amounting to 100 rupees. Till now, the player's liability on a deposit of 1000 rupees is 380 rupees. Now, there can be two scenarios. If a player loses, he will have to forego the entire amount in addition to the taxes paid. If a player wins, say 2000 rupees, he will have to shell out another 30% as tax deducted at source or TDS. This will be 600 rupees. So even if a player wins 2000 rupees on an initial deposit of 1000 rupees, his total liability will be 980 rupees, assuming the platform fee is 10%. This is considerably higher than the previous rule where they were supposed to pay only 18% tax on platform fees, which is 18 rupees in this case. Let us first assume that a player wins. Under the old rules, their liability, including the platform fee, was 100 rupees platform fee plus 18 rupees as tax plus 600 rupees on winnings, totaling 718 rupees. Under the new norms, the player's liability will be 280 rupees as GST plus 100 rupees as platform fee plus 600 rupees as the tax on winnings. The total will be 980 rupees. Moreover, if a player loses in the old norms, their liability would be 100 rupees as a platform fee and 18 rupees tax on it, totaling 118 rupees. In the new rules, it would be 280 rupees as GST plus 100 rupees as platform fee, taking the total to 380 rupees. Under the previous announcement of the GST Council, the players were also asked to pay 28% GST on the winnings. It would have meant that in the above case, when the winnings were 2000 rupees, if the players decided to bet the money again, they would have been liable for GST on it. This would have meant that on top of the tax liability of 980 rupees, another 560 rupees would have to be paid by the player just to bring the money back into the game. This clause of repeated taxation has now been done away with. The platforms will have to pay 28% GST on the face value of the bet. So, in the above case, they will be required to pay 280 rupees on a bet of 1000 rupees. Moreover, several experts have said that such a heavy tax burden on the players will discourage them from playing real money games. Also, the companies cannot save the levy even if they shift their base outside India, as the GST Council has decided to bring in registration requirements for discharging GST in India.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She has ambitions of becoming a brand. Business Standard.